Hello everyone, welcome to today's video on Bank Nifty futures price action analysis using 1 minute candlestick chart. Price basically continued the downtrend that was established yesterday, and you can see that the bar one is a strong bearish bar, opened at high and closed at low. So definitely it was a strong bearish continuation. Of course, it broke the yesterday's low as well convincingly. This line here is the yesterday's low, and this is where they opened. So this is another area or line that I have drawn. I keep drawing these lines because these are important zones. Okay, not exact levels, but the zones where price will either get support or resistance, and that is important for price action analysis. Okay, what happened next is a strong looking bull bar coming up and closing almost at its high or near its high, right? So definitely a possible breakout failure, but we're not going to count on uh, just one bar showing a strong bullish sentiment here, okay? Because there immediately is a resistance here, yesterday's low. Now that it has gone below yesterday's low, coming back up and closing above it is going to be a challenge, right? For any trade, we always look at where the trade is going to be initiated. What is the location of the trade? Context is there, definitely number one. And second thing is basically the location of the trade. Is there enough room for the trade to be successful? Is it in getting into resistance or support level, and that doesn't leave us with enough room for the trade to be profitable, right? That is an important question to be answered every single time. What happened next is bar 3. It went up, but it stalled at days open. This is the level where it stalled, right? And that is a clue that the bulls, even though they showed uh, strength here, is not able to go past this level. Days open is an important zone, and the bar closed bearish, right? Even though there is a tail at the bottom of the bar, not strong bearish, but the point is those bulls who were trying to push it did not get follow through, number one. Second, these bears who sold the close of this bar, betting on continuation of the bear move, are scaling in, because that's what you see here. They were able to close the bar bearish. They did not allow the price to go above days open, which clearly means that bears are winning at this point of time. How do you know that for 100% surety? No, we do not know. And trading is not about 100% surety. How do I know this is going to continue down with the bearish move? I do not know. The max that I know is 50 to 60% on any trade, and that is as good as it gets. Okay, and we have to keep betting on our knowledge or experience. So here's a short. Why? Because of the context that I mentioned. Bears are winning here. These bulls are possibly going to be trapped. That is the setup that I rely on most of the time, right? So what you see here is a short trade initiated below bar 3, right? And that was around 19,573, and depending upon where you get filled, right, it got a very good entry bar, almost coming close to bar 1's low, which is where the possible support was going to be there, because if these bulls who bought in here or bought the close of bar 2 were going are still holding, they will try and scale in below bar 1's low, and then either get a break even or maybe profit, depending upon how things pan out later on, right? So what you see here is 573, 19,573 is where we possibly initiated the short trade. Definitely a very good entry bar and a decent follow through bar. Now it went to 19,533, and on this bar it went to 530. I usually target 3-hour or 4-hour trades, which means 1:3 risk has to reward ratio, or 1:4 risk has to reward ratio trades, and risk is always 10 points all the time, except when the volatility is too high, wherein the difference between the on the y-axis is basically it is 50 points or something like that, which means the range has expanded exponentially. At that point of time, I will basically go for maybe 20 points of risk, and all that depends on the analysis at that point, right? So risk is 10 points, reward is 30 points or maybe 40 points. What do you see next? So you either got out of the short trade looking at good 3 hour, 4 hour profit, or you still continuing depending upon your profit booking method. Bulls provided a support below bar one's low, which was kind of an expected one, and they're trying to push the prices up so that at least those who got in here get an opportunity to get out at break even. Now there's a follow through on this bar, and then there is this bar, which is a breakout test of this short below bar 3, right? Now, is this a one? Is this the first pullback entry? Possibly yes, but this is where your experience comes into picture, right? Wherein you're avoiding this entry because there is this strength that is being exhibited by bulls, one, and second, this bar is not a good looking bar as far as short is concerned for a first pullback. Why first pullback? I'm considering this trend to be downtrend because this is a lower low, another lower high, and then again another lower low. So as of now, the downtrend has been established, and again continuation of yesterday's price action movement, right? So I'm going to skip this short trade, right? And you can see how a price action reacted after that. Now I drew another line here, which is basically the lowest close of the day till then, right? This is where the price closed, and after that no close went below this particular price area, right? Which was around 19,541.40, correct? And then what you see next is there is a bear pressure. Some bears scaling about this bar. The break-even stop was not hit, and they push the prices down one more time. But you see a tail, which means a weak attempt. Possibly there are bulls below this bar, and they're going to provide the support in this zone as well. This bar's low is 19,541.05. So these bears who sold the close of this bar, betting on the continuation of this down channel that you see here, right? And who had still were holding the price, not the price, sorry, the trade, the short trade. They got out here. Some of them got out here. That's why you see their tail here, which is significant compared with the body, right? Some of them might not have gotten out yet. They're still waiting for price to show further clues, and then they will decide to whether to stick to this short trade or get out. Then what you see is there is a strong looking bull bar again. So bulls are not letting it go, right? And it has broken the trend line that I have drawn here. I basically drew this one first because that is basically one level and second level, or pivot high or swing high and swing lows were established. I joined them, and I drew a parallel to that, and that is what was broken, right? So whenever the trend line is getting broken, that means trend is weakening. Then you see this attempt by the bears, a strong looking one because the bar closed bearish. But what do you see? This closed as 19,550.20. Immediately bulls bought the close of this bar, and this attempt by the bears was held much more above the level where this LC line is being placed, which is 19,541, and this low is 19,550. So 10 points above that level. So and this bar closed positive or bullish. What is the price action telling you at this point of time? Which means there's the lowest close. Some bears sold it here. They might have gotten out in this bar. This is basically the first attempt by the bears to again push the price down, or this is where the bears failed to make a dent. Bulls are trying to hold the ground. This is the second attempt by the bears. They did not even get uh, a distance which will allow these bears who were still holding to get a break even exit, because the bar immediately showed a bullish pressure and it closed good enough near its high, right? What it tells you is that these bears are trapped now, because this is first attempt and this is second attempt. Two attempts to go down or push the price down failed. Even though the context is bearish, what you have to see is what is happening right now. You cannot be biased. Yes, we do not know something for 100% sure, but you have to bet on what you see, right? What you see here is bears made two attempts to go down and both of them failed. So you bet on possible bullish breakout, because that's what will give you money, breakouts, right? In the sense they will give you money faster if because breakouts tend to go faster or move faster with high volumes, and we want to bet on them. But we are immediately into this possible resistance level, which is a break-even test. So you have to decide whether you want to go for such a trade or not in terms of the risk-reward ratio. I bet on this because I thought that two attempts to go down had failed, so possibly we are going to cross this resistance level without much issue, right? So long above this bar's high, which is 19,562.60. So depending upon where you got filled, maybe 0.75 or 63, right? And then you sit through all of this. This is all trading range, price action, right? Price went past this break-even test. Multiple attempts were being made by bears as well to push the price down, but you were making higher lows compared with this, and bulls were not allowing this particular zone to be broken downwards, right? And this is all trading range, price action zone. So is the bear continuing here? This is a weak looking bar, this is a weak looking signal bar, right? And this is by then, or by this bar, trading range, price action had been established. So when you see this, which is a close at its low, decent looking bar, it's a trap. It's another trap, because after these failed attempts, bears made another attempt, one attempt, two attempt, three attempt to go down. Trading range, price action, not much room for the downward movement. When you see this bar, these bears who tried to sell below this bar, they were clearly trapped. That's clearly shows by the size of this bar compared with the other bars in this trading range zone. And then you see this bull breakout that continued much higher, right? What happened here is these bears who sold below this bar possibly saw that, oh, there is a strong bull breakout, it is going past days open, and there is a follow through now, and there is another bar as well, right? This is a third bar. Now whenever you see three bars consecutively showing a particular movement, up movement or down movement, it gives an indication of a trend. They try to scale in on this bar, right? With that's why you see a tail here, but that attempt immediately failed on next bar. There's no continuation, or there is no response to this bearish pressure. Instead, bulls knock it off, right? In this bar is a pivotal bar or important bar, because that is where bears got out. They could see that all that bearish pressure that they had been accumulating is no more applicable here. Bulls are winning, so they had given up. So bears had given up, bulls were aware of this fact, and that's why you see this breakout. This is how breakouts come about, right? Now I drew a line from this point and this point, again a pivot. There was another channel that I had drawn inside this, but depending upon if the price had already gone past that particular channel, I'll look at readjusting the lines. So I drew this line, and then I had drawn a parallel here. That's where you see that it found resistance, some more trading range, price action, and price had been basically coming down in a bearish channel afterwards, which is this channel, or you can call it as a pullback, right? So that's what happened in today's price action here. I hope this helped you. Thanks for watching.